If you had owned just 5% Tesla in a portfolio and S&P for everything else, you would have done materially better this year, 40% better.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So there's just 3 days of trading before Tesla is officially part of the S&P 500 index. In this video, I'm going to be reacting to some of the mainstream finance media coverage of Tesla stock's inclusion in the index and some interesting data demonstrating the benefit of owning a disruptive, innovative stock like Tesla versus solely owning index funds. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Tesla shares are off just around 1% today, but over the past month, it's been a clear winner. Well, it's been a clear winner, I guess you can say, for all of 2020, as you can see here on your screen today with the shares off just around 1% at $6.32 a share. Now, the rally that we've seen, though, recently comes ahead of the Tesla's inclusion in the S&P. That, of course, takes place next week. Emily McCormick is looking into this for us. And Emily, I think the big question here for investors is they're trying to figure out whether or not this rally that we've seen is going to continue after Tesla is added to the S&P.
That's right, Shauna. That is really the question here as we are in the final stretch of trading before Tesla joins the S&P 500. We heard about a month ago that the company was going to be included in the index, and with a market capitalization of more than $600 billion, Tesla is set to be the largest company ever added to the S&P 500 and the 6th largest company in the index once it's actually added. So that rebalance is set to take place after market close on Friday, and then trading with Tesla in the index will start on Monday after the opening bell. Now, Tesla is replacing the company Apartment Investment and Management in the S&P 500. Inclusion does mean that Tesla will get more exposure to traders invested in index funds that are benchmarked to the S&P 500. And in anticipation of that, that really had catalyzed this rally that we've seen in Tesla so far over the past couple of months. There's more than $4.6 trillion in assets indexed to the S&P 500. So as that company actually gets added, index fund managers are going to need to buy an estimated around $80 billion of Tesla stock and sell as much of that across other stocks already in the S&P 500.
Translation: the remainder of this week and especially Friday is likely to be anything but boring, not just for Tesla stock, but for all stocks in the S&P 500. Now, I don't have a crystal ball, but based on the available information, a little bit of intuition, I know highly scientific, it does appear that the majority of buying activity of Tesla stock for the funds tracking the S&P will in fact occur at the end of this week. The volumes daily for Tesla stock so far this week have been relatively low, which seems to suggest that everyone's waiting till the last minute. This may work out, this may not. As I said in a recent video, I have absolutely no idea what will happen to Tesla stock. It really does depend on how many hedge funds and retail investors and traders have been front running the inclusion and plan to sell shares that they bought to make a quick buck to the funds that need to buy them at S&P inclusion. So who knows what's going to happen, but I can say one thing. Volumes are going to be very high in the later part of this week, and anything, literally anything could happen to Tesla's stock price.
And Tesla is set to have a weighting of about 1% in the index. But again, to your point about where the stock actually goes from here, we heard, of course, from Dan Ives of Wedbush that the China story, the demand that's coming out of that country is going to be a linchpin here for Tesla going forward. The company, of course, opening the Shanghai Gigafactory earlier this year and continuing to produce Model 3s in that country.
And I have to say, things appear to be going relatively well in China for Tesla.
We, of course, have Giga Berlin on the way, as well as a factory in Texas. So a number of catalysts here upcoming for the stock. There may be some volatility in the next couple of days ahead of inclusion. But of course, we are always keeping our eyes on Tesla.
There most certainly will be some volatility. In fact, Tesla stock down over 3% as I record this, and it's still fairly early in the day. So who knows where things wind up. out. And now let's move on to some of the analysis around what would have happened if an individual investor who typically invests in index funds also bought a small slice of Tesla stock this year.
Tesla was obviously a rocket ship this year, up over 650% on the year so far, and the year's not quite over yet.
Did someone say Tesla stock and rocket ship? What a great opportunity to plug the merch store once again. If you haven't already, please feel free to pick up a Tesla stock to Mars t-shirt or mug, link in description.
And that's a pretty amazing result, mostly because it was already a very well-known name at the start of the year. It had major brokerage industry coverage, it had a lot of fans, people understood the model, and it was amazing to see such a well-covered, well-understood name work so well.
Tesla stock, well covered? Yes. Well understood? Not even close to. This is why I've been pounding the table now for over 12 months on this channel, trying to help people see what I see about this company. And definitely people are starting now to grasp a little bit more than just, oh, they make cars, they're an automaker. But there's still a long way to go before people really, generally and widely understand Tesla. And until then, lots of opportunity for Tesla investors, in my opinion.
So that is extremely impressive and also extremely rare. And so the fact that it has not been in the S&P has really hurt the S&P. The S&P is up roughly 15%. So if you look at that versus the 650%, you understand that the S&P really missed out on a lot not having this name in the index. The Russell 1000, which is not as well known an index as the S&P 500, did have Tesla inside of it all year long.
Well, I just want to say, after Tesla stock's 2020 returns, Tesla, you can be inside me all year long too. I didn't just say that. You guys imagined it.
That's really important because whenever you have a relatively large company like Tesla, as it was at the beginning of the year, in an index like that, and then it goes up, it has more and more and more weight on the index as it rises. And the bottom line here is the Russell 1000 is also a large cap index, much like the S&P 500. As a matter of fact, it has the S&P 500 plus 500 more names, hence the Russell 1000. And the fact that it had Tesla means it's outperformed the S&P dramatically. We're talking 17% plus return versus that 15% for the S&P. And the majority, if not all of that, is the fact that it owned Tesla. So it's interesting to see two indices that are basically structured to do the same thing, cover all large cap stocks. Do so differently because one happens to own a name and one doesn't happen to own a name. It's very unusual, very rare, but it happened this year, and it's important because it shows you that occasionally you have these breakthrough companies that are so important to society that aren't included in an index that everybody owns.
I just want to share a few thoughts on index-based investing. I think for the average investor, and when I say average investor, I mean the average investor, average income, average intelligence, average goals, all of this kind of stuff. This is a great way to do something better with your money than leave it sitting in a bank account wasting away due to inflation. However, I also want to point out that this style of investing is going to be far less effective in the future, and the reason is quite simple: disruptive innovation. The majority of companies in these index funds will be disrupted by new innovative companies. There's the disruptors and the disrupted. Index-based investing has worked relatively well for a number of years now, but in the future, we're going to see a tsunami of hurt within the S&P 500. Mark my words. Bricks and mortar retail, traditional banking, rail infrastructure, all sorts of transport. Things are changing. Now, you guys know that I don't give investment advice. Just here to share my thinking. You can make of it what you will. However, I am going to make a bet on the record because I'd like to illustrate a point and I'd like you guys to keep me accountable. Let's check back in 10 years. If you put $100,000 equally weighted across ARK Invest's funds, ARK K, ARK Q, ARK W, ARK G, etc., versus $100,000 in the S&P 500 index today, I guarantee you that ARK will absolutely destroy, not just a little bit, destroy the returns of the S&P 500 over the next 10 years. Passive index style investing that doesn't heavily skew towards investing in disruptive innovation is going to produce astonishingly poor returns into the future. Mark my words.
So the S&P is adding Tesla at a much bigger part of its life cycle than the Russell did. Beginning of the year, Tesla might have been 0.5% of the S&P. I think it was 0.6. When Tesla goes into the S&P, it's going to be about 3% of the S&P. And it's just much harder to think about Tesla doubling or tripling again. Remember, 650% this year. It's much harder to think it's going to have that kind of return off a base where it's already a top 10 company in the S&P 500. So it's not going to have that much of an impact on the S&P as it had on the Russell this year, but it is super important. It's going to have a big impact on the S&P no matter what it does, up, down, or sideways. It's a big new ad. It's like a boat anchor on the S&P now because it is so large a part of the index. So this is such an important point to have everybody understand, and that is that you can own an index fund, and all of us do, I think, for retirement planning. It's a sensible way to go about things. But if you just sprinkle in some of the names that are big, the important societal disruptors into a portfolio, you can materially improve your returns. If you had owned just 5% Tesla in a portfolio and S&P for everything else, you would have done materially better this year, 40% better.
And if you had owned a portfolio that contained 0% S&P 500 index, 97% Tesla stock and a tiny bit of Amazon stock and a little bit of Google stock, how would you have done then? Asking for a friend.
And so if you think about those kinds of returns, it really pays to do your homework, think about disruptive technologies, and where it makes sense for you as an investor, own just a small slice of those names in a portfolio. Because what we saw from Tesla, and this is the central lesson of 2020, is big disruptors that aren't in indices can materially change portfolio returns if you own them and the index doesn't.
So to sum this one up, how about a little bit of an analogy? The S&P 500 index is the Titanic. The disruptive innovative companies contained within the index are lifeboats. I'll leave you to ponder that. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.